Welcome to the Swing Trading with Cycles channel. It is January 25th, 2023. We're going to do an update on uranium today. And the last update we did, it looked like uranium was rolling over, and it was. In general, the market had a little bit of a correction for a couple days. But since then, we have actually started to turn things around. That said, the market has also started to rebound. And as I've said many times before, this uranium is going to go the general direction of the market. So as we see strength in the market, we're going to see more strength from uranium. We're going to look at Kazatomprom for this one, especially. We'll actually start there. So this is one of the bigger holdings, I believe, within URNM, one of the bigger uranium companies in the world. And so this is a little bit rare. Let's actually start with a daily cycle first, because we generally look at the higher time frames first. But in this case, let's just look at the daily first. And if you're new to this channel, as always, and even if you're not new to this channel, take a look at the pinned comment. It's going to have a ton of background information for you. Cycles 101, some primers on price action like swing highs and swing lows. How to identify them, why they're important. And so I won't go through all of that in great detail here. I'll assume that you've consumed some or all of that content. But the most important thing about cycles, I mean, my God, this will change your investing life, the way you trade, the way you make money in the market, right? It's all about understanding how likely it is that a rally is going to continue or a decline has ended, is the way I kind of think about it. So because that's all a cycle is doing, right? It's measuring a period of a rally and some retracement over some time frame. Okay, so here with Kazatomprom, we have actually a perfect example. Again, this is a daily chart. We're going to zoom out to the higher time frames, but let's just start here because we have a furious rally happening here. So let's use these tools here in TradingView. So first off, actually, before I do that, let's just identify the swing lows. That's how you start, right? And so actually we'll use this thing here and just make sure that's only showing up on the daily. Okay, so that's a swing low. That's another. These are just minor swing lows. That's probably the swing low right there. So these are swing lows on the daily chart. A swing low, TLDR, it's how a rally begins, right? So like this swing low went to this swing high. This swing low went to this swing high. And let's just put in the swing highs as well, right? Yeah, let's just make sure. Okay, so this swing high, so this swing low rallied to this swing high, and then this swing high declined to this swing low. That's the entire movement of the market, folks. I'm telling you, take a look at that pinned tweet. It's a way to just simplify, think about it at a basic level, how things really kind of work, right? That doesn't mean that gives you the Rosetta Stone and you can just pull money out of the market necessarily. There's a lot more to it from there, obviously, but that's where you kind of start, right? So let's just focus on this swing low to this swing high. And again, so not to go into a ton of detail here because there's a whole video on swing lows and a whole video on swing highs, but a swing high occurs when a candle makes a high. So this is a candle that just made a high, and then the subsequent candle makes a lower low below that candle's high, or excuse me, below that candle's low. So this candle, I'll just zoom in and make sure we're all seeing it. This has a high at 33.88 and the low is 32.74. So once price went below 32.74, that created a swing high on the daily chart. And actually, this is trading right now, so you can see this candle closes in 3 hours. And of course, this is not a U.S. listed stock. It's about 8:30 right now in the morning, Wednesday morning, January 25th, U.S. So this thing is trading live, even though the U.S. markets aren't open. But that's important to understand. And we also have this swing low. So a swing high is bearish. It's negative. It means it's the start of a downtrend. And a swing low is bullish. It's positive. It's the start of an uptrend. So this candle makes a low after like this move here. And yeah, we should draw that swing high in so everybody can see it. Boom. There's every time you can like look at any chart. That's your homework. Go take a look. there are swing highs and swing. That's all it is. It's from swing low to swing high to swing low to swing high, right? And so we rallied. How long has this rally been going? I guess first off, so from that swing low to that swing high, it's been 20 days, right? And the way we know this is a swing low is because we crossed above the high of this candle that marks the low. So same kind of idea as this candle up here. In this case, candle low was 26.20 and the high was 27.46. So once we crossed above 27.46, the rally was on. So you could say we've rallied from 27.46 all the way up to where we are here at around 32 bucks, right? Pretty nice. And that took 20 days. And so that's where the cycles piece comes in. So you would say that this has been 30 days so far, because the cycle always starts with the swing low. So if this is the start of a new cycle, this is day 30, or excuse me, not day 30, excuse me, day 20. So this is day 20, and this day that we're getting here today, big down day, and so this is a very interesting kind of turn of events, and I think correlated with markets in general. This would be day 21. And so what you're trying to identify now is, are we starting a downtrend in earnest that's going to now generate a daily cycle low, something like this, right? Like, because this was a whole cycle, you could say, right? You had this little rally that started here, and in this case, that rallied for 10 days, right? And so this is a much longer rally. That's bullish. Not to mention, I mean, you just think about the bigger picture here. This is just like massive consolidation for basically 64 days, right? Just kind of churning up, down. Now we've gone appreciably above it. You would expect if we're going to get our daily cycle decline, we probably come back to like around the top end of this range. So that's like right around $30. Maybe the low 29, like, 29.50, in that kind of neighborhood. Like, you kind of think about it, we were like stuck in a box like that, right? Like just churning. And that's obviously a very wide range in percentage terms, but you imagine this could come back and kind of test that, and if we can bounce off of it, that would be kind of your launch pad. So that's your daily sort of view. What does that do to the weekly chart, we would ask, right? So on the weekly chart, this is our last low, and this is an interesting one because this low is obviously higher than this one and higher than this one. So we've obviously been doing a little, like, we've been in a little uptrend on the weekly chart, right? That's another way, like, if you were a trend line guy, you draw something like that, right? Like you could say, right, like and you could even actually draw it back to there, right? Like something like that, or even, right? Like, so that's interesting, right? Like, but from a cycle perspective, we clearly have something new brewing on the daily chart. And so it's possible that this is a new kind of weekly cycle, if you want to think about it that way. And this would be week 5. So this is week 1, week 2, week 3, week 4, week 5. But because of that big pullback we're getting on the daily, we're getting this potential reversal candle on the weekly. So we're going to have to watch for that. It is Wednesday, so there's quite a few, there's still a good amount of trading to happen. So before this weekly candle closes, so we're going to watch this. The level to watch is last week's low, which is $30.20. If we fall below that, that creates a weekly swing high. And that's where the multiple time frame analysis comes in, right? The same way that those same patterns that we were just talking about on the daily, they're even more significant on the weekly chart, right? And so if we were to get a big, like, this candle, we're just to continue to, or let's say next week we get something like that, that would be a bad sign, right? Like that would, because you're potentially starting a downtrend on the weekly chart. And what does this do to the monthly? I think someone actually called out on Twitter how bullish the monthly looked, which obviously, is going to be a function of everything else. And so my read on this is, I mean, you can think about the sort of longer term price action. Like these are monthly candles now. So this is going back to 2019. And so you can see we had this major low on, what month is that? February. Wait, that's not right. Let me just refresh this. So we had this major low, March 2020. That's your COVID low, right? Many markets made a major low. Gold is an interesting one. Didn't really. We then had this kind of like consolidation period here, right? For 1, 2, 3, 4, 5, 6, 7, 8 months. Didn't really do much, right? I mean, decent percentage return, I'm sure, but like in the grand scheme of things, looking at this chart, not really much. And then we have an explosion after that. And if you think about from this swing low to this swing high, that is 20 months. 20 months. So obviously a much longer time period. We're talking about a longer term cycle here, like, 18 to 2 years, 18 months to 24 months, that kind of thing. And then we get a decline into month 24, which maybe that was a major low. That was in March 2022, actually. Since that, and I think this is the most important thing, cycles aside, we have just been consolidating inside the range of March 2022. All of this price action for Kazatomprom has been inside the range. So we've been inside. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So for 10 months, we have just been kind of churning inside the range of one monthly candle. So this whole big move, and notice that this big move down, and what's the low on that? So, this big move down is $22. We like bounced really viciously hard off of it. I mean, let's look at what that looked like on the weekly, actually. Let's just zoom out to that one. So that was this candle here, right? So the week did end red, and you can see we actually spent almost 3 weeks inside the range of that weekly candle. So this is a smaller kind of microcosm of what's happened on the monthly chart over literally the last 10 months. In this case, we broke out above it. We then kind of bounced along that. Look at how price kind of bounced along the upper end of the range on this big, massive, important candle down, right? And like we didn't kind of stay significantly off of it for a while, and then finally made that move up. And of course, this is the weekly version of what we were just looking at on the monthly chart. So all that to say, we could be in a period where this little consolidation here, and really this consolidation, is analogous to this. Now, the difference here is that obviously this consolidated way up in the, like it actually consolidated above the range of this, whereas this has been consolidating inside the range. So this is definitely more bullish, right? Whereas this hasn't really proven itself yet, let's say, right? But you could easily see a move like something like outlined here. I'll take auto off so you can see, like some kind of rally, big pullback, and another big thrust up into like month 14, right? So maybe another 6 months of upside easily. If this was the start of a new long-term cycle, and this like sort of churn is just the prelude to the next kind of big leg up. And that obviously has big implications for uranium as a whole. Now, this is just a scenario, not a prediction, as always. And certainly nothing has to happen on month 14. You notice, again, this rallied to month 20. So this is actually relatively conservative. And then we'd have a move down into some kind of major cycle low. And then you imagine the cycle, like you get another big kind of thrust up, right? If this did stop on week 14, if this did top out on month 14 and it did, bottom around month 24, it would be a right translated cycle, but not by that much, right? Like this is super right translated, 20 months up, only 4 months down. Now, the other possibility exists that this is actually all still the same cycle, right? Like that is your 20-month high, and this is now with 24 plus 9, that would be 30, month 33, right? So it could be more like a 3-year cycle. That doesn't mean, we're not saying that cycles control the price action. It's more like that's a scenario to be aware of. Let's watch what price tells us as we continue to observe it, right? And so that's Kazatomprom, which again is a meaningful weight, I think, within URNM. So I did want to just kind of focus on that one for a second. But again, interesting that this near-term price action here is, showing a pullback. Let's run through some of the other names really quickly because they had been sort of rebounding. Let's look at UUU. So, right, last time, like we had this swing high, like, right, we had this line, and that's why it's so important to understand the what levels matter, and to be nimble to always understand the bull case and the bear case kind of thing, right? Which is to say, what levels do we need to break to be bullish to the upside? What levels do we need to break to the downside to get more bearish? And whenever we break a downside level, always being aware of the potential for a false breakdown, because that's what this is, right? So like this, I mean, this little wick, this is a swing low. Again, that all too important concept. This is a swing low that's higher than this swing low and higher than this swing low. So this is a bullish turn for UUU and really a lot of the other uranium names. It broke out above this cluster of highs, so it does need to stay back above it. So that's just right around $7, and we're here at 710. So that's interesting, and you would kind of play for a move back to like these local highs, right around $8, maybe 8.5 even, and then you have this other kind of shelf up here at 10. So not a terrible risk reward here, actually. It looks like we're pulling back pre-market. That makes sense. The same kind of weakness we're seeing from Kazatomprom obviously is going to reflect on the U.S. markets. So we're actually indicated to open at 691. So that would be below the $7-ish level, like below this top. So that's not great. And you think about this last weekly candle here, or excuse me, this last daily candle here, the low was $7. So just to be clear, your candle is going to open something like this. And so just to be clear, what is that? That's right. It's a swing high. But again, that other principle we just talked about, always be aware, if it recaptures that $7 level, that becomes a false breakdown, right? Just like this was a false breakdown of like this level here, like we washed below that, and then we've made a higher high now. So the levels are actually quite clear, and I think we're going to see a similar setup in all of these. And let's just see what does that mean for the weekly chart, because that's your daily. And on the weekly, and this is a really, like, look at this. Wow, nice. So this was a very deep red candle, made a slight lower low, but then kind of rallied all the way back. Didn't quite go green though, missed it by just a little bit. And now we actually have made a higher high above last week's high. Again, so another way of saying that this is a weekly swing low. Obviously the fly in the ointment is we're opening lower today, and so we're now falling back into the range. And more specifically, we're in risk of becoming a bearish outside candle, right? Where we do something like that, right? Because we've already made a new high, and now the candle is threatening to go red, right? Because this candle opened, the weekly candle opened at 696, and we're indicated to open here at 691. So this weekly candle has just gone red. So that's going to be something to watch for. I'll definitely be keeping tabs on this on Twitter, and I'll do a video update as it makes sense. And as always, be aware of the monthly levels. Monthly opened at 623, so below that it goes red. So we're still quite a bit above that. And again, this false breakdown bodes well. It's really early in the day, so a lot of trading to happen still anyway. But what this puts on the table is the idea that the weekly cycle advance continues, right? That we're continuing this weekly cycle rally. That's for UUU at least. What about Denison? Ooh, Denison is looking perky. And my God, it's the same pattern, right? Like, does this not look like the identical chart we just looked at? A false breakdown. The other thing I didn't mention, which is important, this yellow line is your 200-day moving average. It's your 200 period moving average always on every chart. And so this is a daily chart. And so we had this false breakdown that bottomed right above the 200-day moving average. That's actually quite bullish. That's a very bullish turn. Although at the same time, yeah, this is looking long in the tooth in terms of like the rally. Like we may be rallying into a daily cycle high, but so we want to watch for the pullback. In terms of the weekly, this is very clearly still in weekly cycle advance. This is week 7. That's nice. Wow, Denison is finally kind of waking up. I haven't taken a position in this thing in years. I might consider that, actually. Interesting. And so you're playing for, you got to get out above this treetop here, like around the 152 area to really feel comfortable. And so that could be an upside target where you expect maybe there's a little bit of a pullback. That's a nice little percentage gain from here. And then you have this next shelf up here at around 187. So another way of thinking about that is a break above 152 could get you to 184. So that's actually a pretty nice risk reward, you know, some kind of buy stop there. And let's look at the monthly chart. We've been coiling on this name for a while now, right? Like really just inside candle, like these 3 months all inside this month. So that's September 2022. But look at this. Ooh, this is a nice little breakout attempt here. Look at that. We've broken out above the highs of the last 3 months. But we are still inside the range of our December 2022 candle. And not a coincidence, the top end of that range is the 153 level. That level that we identified on the daily, that's kind of obvious structurally. So that's important. If we could break above that, like that's your like you know, this is just your monthly version of what we just talked about. The 187 level is up there, right? And that could still be bearish and kind of roll over. So in that sense, it's a nice kind of play. This blue line here is your 10 period moving. Well, actually, yeah, that's your 10 period moving average. So we're actually also just crossing above it because we've been basically below it the last 3 months. So that's also a really important signal. And your teal line is your 50-month moving average. So we didn't quite get down there. So that is interesting. It's funny, that could go both ways, like as a sign of strength or also as a sign that there's more wood to chop. I talked about UEC being in weekly cycle decline, and again, that might be changing. Again, we're seeing weakness today, so we're going to have to see how the trading day plays out. But if it can make a move back above 396, that will make this thing a weekly swing low, right? And a higher weekly swing low than this, right? It'll just be sort of a little pullback within the weekly cycle advance, right? So very bullish. Like, and obviously we then have to take out the high on week 4 ultimately, right? So that's week 4 or 5. This is week 6. And we'll have week 7 starting next week. So we still have time. So we would still have time to rally in the weekly cycle, right? We're only on week 6. So that is really interesting. What about yellow cake? So this is looking weaker than most. It's an inside weekly candle right now. Pretty clear level high 407, low 380. So you're just kind of inside that range. A break below 380. Like this is, you know, we talked about how, I mean, that's the thing. Like this is very subjective. You could say this is a bear flag. I mean, to some degree, this looks kind of healthy. I mean, ultimately, most important, let's just be objective here. That is clearly a swing low and a weekly cycle low. We crossed above the 10 period moving average. You know, you kind of satisfied everything. So it's really a question of, is this our weekly cycle high? So week 1, 2, 3, week 4. That's the question. We're going to have to see. Right now, not looking so hot with the way this weekly candle is looking. And of course, we know there's pressure on uranium names now with Kazatomprom sort of puking a little bit. Elevate uranium, also not looking great. Yikes. The range to watch for that is a low of 0.395. If we break below that, you could find yourself all the way. Wait. Is that accurate? Yeah, you could find yourself down around, you know, below 34 cents, like below 35 cents. And what is the monthly? Yeah, so the monthly is still green, so that's hanging in. What about FCC Fission Uranium? That has been looking strong. So this has a pretty vicious 1, 2, 3, 4, 5 high on day 5, but like in the last couple of days, it looked like it was going to try to come test that. And of course, again, we're seeing weakness around the uranium space, so we're going to have to see. But that would get you a move back to about $70 basically. What do we look like on the weekly? So on the weekly, right. So this is an interesting one because it kind of looks like, this looks like a pretty significant low here. Yeah, I think we talked about this in the last video, right? So week 1, 2, 3, like this may be week 2, 3, 4. Like we may be in week 4 of something new potentially, What is the monthly? Sometimes, you know, like if one time frame isn't clear, yeah, it's really just all consolidation. If you look on the monthly, that's helpful to see. Yeah, you have the big monthly candle in November, and we're just consolidating inside of it. So to me, that actually leans bullish then, really, because we're consolidating inside a big green month, and we're still at the upper end of the range as of right now, right? So that's Fission Uranium. And Fission 3.0, that was a really... actually, let's look at Next Gen first. We haven't looked at that one in a little bit. So week 1, 2, 3, 4, 5. So it's week 6, trying to continue the weekly cycle advance. So pretty similar to UEC, actually, this one. What about UROY? What's this one doing? So 1, 2, 3, 4, 5. It actually has made a new high this week on week 5, but that's not necessarily... Like, that could turn out to be not great, right? This could be the ICH, the weekly cycle high. I mean, we're going to have to see. But it is making a new high this week. Still a lot of overhead resistance to get above. And ultimately, as we've talked about, just massive consolidation inside this box. So kind of similar to Denison in that way, just kind of consolidating inside a box until a big breakout eventually. What about Paladin? Let's look at that real quick. Looks like it's week 3 of a new weekly cycle, actually. And making a new high, right? Like this is our low. So you notice there's dispersion here. They're not all doing exactly the same thing. And it's important to understand the price action, right? So that's week 1, week 2, new high on week 3. And you're really going for this kind of area around 88, 88 and a half. And finally, Fission 3.0. So this is one that I'm really watching. Made like a 400% move and then had to kind of consolidate gains, obviously. So we're now moving into another daily cycle low. So we had this huge move up, and then we had a 30%, like this is like a 300 or 400% rally. And really, like the bulk of it happened in like 2 or 3 days, like this big candle, really. And then you have this follow through that pushes you higher. And then you get your swing high on day 26, you pull back. This is how you use cycles to control risk instead of like chasing this thing here, right? You let it pull back, let it come to you. This is a 30% pullback from the top. And then you get a swing low, which tells you, okay, maybe we have a daily cycle low. You close above the 10-day moving average, and then you go. Then you have another higher swing low, and then you keep moving. So this cycle rallied for 18 days, right? After this cycle rallied for 26 days into this big parabolic top. But notice, again, you could have picked it up somewhere around here, right? Like after this swing low. But we're now moving into another daily cycle low similar to this one, right? How much downside have we seen so far? Let's just see, just to kind of ballpark it. So from that to so far our low, it's been 26%. So that's, I mean, and this is by no means some kind of like ironclad rule, but it kind of gives you a general like ballpark. Like, okay, well, we've pulled back 26%. That's now, of course, like all the other names, it's going to get pulled with the broader market, but this one has some fundamental catalysts we know about. And so we rallied up to 38 cents, and now we've pulled back to a low of 28 cents. And we closed yesterday at 30, just about 30 cents. So that's a massive discount off of this like 38 cent top, or almost closer to 38 cent. So this is getting interesting here, right? If you wanted to take if a really risky bet would just be to kind of step in somewhere around here, knowing, but at the same time, this has been right. So this was 1, 2, 3, 4, 5 days. This has been 1, 2, 3, 4 days. So if this isn't the bottom so far, it's probably close. So you want to be watching this. I'm going to be watching this pretty closely. What we're looking for is something like this, confirmation tomorrow, right? And so I'm going to actually maybe take a little small starter position, and then if we get confirmation, add. I already have a small starter position that I took down around here, but looking to kind of add along the way, because I mean, this thing still only has a market. I mean, I say only, market cap is what, 93 million, right? So that's not, I mean, that's not like itty bitty tiny, because I mean, it started much smaller because it obviously has had a big run, but with a fundamental catalyst, this thing could really kind of move. I mean, imagine if this becomes $1 billion company. That's a 10x right there, right? And so use price action to mitigate risk to try to pick our spots. And more importantly, On the weekly time frame, we want to be careful not to get caught up in a weekly cycle decline, or at least if it's happening, be aware of it, right? So my read on the weekly is, right, this was week 1, week 2, big nothing burger, and then you have this big week up. Those were the 2 or 3 days really that made that rally, right? So that's week 3, week 4, 5, 6, 7, 8, 9, 10, 11. So this last daily cycle top is threatening to become the weekly cycle high as well. So that's an important concept to understand. Sometimes a daily cycle high becomes a weekly cycle high as well, right? And so because it's week 11, right, we've rallied for 11 weeks already, right? And we've rallied like, this is a huge, let's just see exactly from this bottom to this top. This my God, this weekly cycle has rallied from Pico bottom to Pico top 684%. So not surprising. At some point it's going to need to breathe. It's going to pull back. So the same way we've had those pullbacks on the daily, we're going to have a pullback on the weekly. And so this may be the start of it. We've already started the weekly swing high process. That's step 1, right? Breaking below the low of the candle that marks the high. So the low of this week is 31 cents. So as long as we stay below 31 cents, we have a weekly swing high on the board, and potentially we're starting the weekly cycle decline. And we don't know how long the decline is going to last, right? But we could ballpark, maybe it's going to be 15 to maybe 20 weeks. That's what uranium cycles tend to be. And we'll look in future videos at some of the past cycles for this thing, though things may look different now because there's a lot more money in this thing, right? Like that's how you get a move like this, right? You get a big increase in volume as well. And so we could be starting something like that, right? Where we have a decline that lasts several weeks, which will be awesome because it gives us a buying opportunity when we finally get that weekly swing low and the next kind of big thrust up. And so I'll be watching this one closely, certainly reporting on it on Twitter, and I'll do video updates as it makes sense. But we'll finally take a look at the monthly chart on this one. And you can see, always important to know, opening price on the monthly candle was basically 24 cents. So as long as we stay above 24 cents, we'll stay as a green month. And knowing that we only have like a few trading days left in the month, really important to be aware that we're going to have an inside candle open for February, right? Meaning February is most likely going to open inside the range of January. The low for January was 23 cents. So as long as we stay above 23 cents, we are still inside the range. So you can imagine something like this, right? Even if we're getting a weekly cycle pullback, right? We probably open something like this. And so what you'll want to be watching for is, do we make a move below the range, right? Or do we stay within the range in February and then make a move lower in March? That's how a longer term cycle decline begins. Look at this decline, right? This is a monthly chart, right? And look at all these months of decline. And then you have all those months of decline taken away, like all that decline taken away in 1 month by one big candle. And again, a fundamental catalyst behind it. You could even see a world where you get something like this and it still resolves bullish, actually, right? Like where it's something like this, boom, 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 right? So again, everything kind of in context, because I would see within this monthly structure, this low at 18 cents is what's significant, right? Like that, right? Like holding that, like if we start like a decline on the monthly. So you're going to want to watch for that if we start to see it declines. That's how you think about a decline in a more methodical, sort of data-driven way, as opposed to just kind of like emotionally buying just because the price is going lower. So that's our update on uranium. We'll leave it at that. Thank you for watching.